Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, May 23rd, and we got a couple economic news releases here. So we'll jump right into it. We got the weekly jobless claims, and last week we had remember we had that uptick up to 360,000, kind of spooked the markets. This week's forecast is coming in at 343, and actually came in at 340. So the actuality came at 340. So a little bit better than expectations, and obviously much better than what we had last week for reportings. The next item to note is the flash PMI report or index for the month of May. And this is a manufacturing index. So anything above 50 is considered expansion, and anything below that is, once you go below 50, it starts contraction. So in this scenario, we had back in April a 52.1 reading, and we had the actuality came down 51.9. So it showed some pullback a little bit, but still in the expansion mode, albeit very slow expansion. And then we also have the FHFA, say that one fast, I think I say that every single month when we see it, FHFA Home Price Index for the month of March. So back in February, we had a 7.1% year-over-year growth or appreciation. And month it jumped up a little bit to 7.2% here. The next item is new home sales for the month of April. So we had 417,000 new homes sales for the month of March, and we figured that would grow up to about 430, and we had it jumped all the way up to 454. This is like the second highest since the post-recession we've had. So this is a great number that came in for the new home sales. So all respectable numbers. Weekly jobless claims decreased, which is good news. The flash PMI still shows some expansion. Home price index still shows some growth, and then new home sales picked up. So overall, good reading on the economic news releases. So we'll jump over to the headline news, and stock market's down. You would think with all those news, stock market would be up, but it has to do with the other things. Yesterday, the after effects of Bernanke testimony and the deadly comments, people worrying about the stock market. I mean, this quantitative easing is kind of like giving a drug addict more drugs, and by them coming to realization that this is going to come to an end, also they're pulling back quite a bit and resisting a bit. So that's why you're seeing the stock market come back a little bit. Also, the stock market's on a global level, China came in with some surprising results where they had their PMI, which actually showed contraction. So obviously now Europe's in a recession. China's just showed some contraction, so there's concern that more slowdown might be ahead. Uh, so if you look at that, then obviously you may want to revisit and see the reality of the Fed actually lowering or tapering off at all, because obviously we're still seeing. We may not. Me personally, I don't think we're going to do it anytime soon. So I think the market's doing an overreaction right now. Let's go ahead and look at the bond market. The news yesterday had a huge sell-off yesterday, and we actually uh, went closed 103 basis points lower than where we started off. And basically, what that means is that no point on Tuesday is now costing 1 point. So that every 100 basis points equals 1 point in pricing. So that's how big of an impact yesterday's news was. And currently, right now, we're down about another 18 basis points. So if you look at from yesterday, we're down about 22 basis. So pricing has worsened even further today than it was yesterday. Now, my idea here is I would say this might shake out over the next few days. After some other items come up that people kind of forget a little bit and they kind of move forward. But this will kind of shake itself out. This is, in my opinion, an overreaction. There is really no reason for the bond market to be down. Typically, if the stock market's selling off, they put into mortgage-backed securities. We're not really quite seeing that yet. So there's really no logic to where this is. This is all more emotion-based, and usually these have a way of working itself out, playing itself out. So give it a couple, maybe next week, maybe after the Memorial Day weekend, we may see some a little bit more stability and get a better feel, gauge where the market will be going. So, all right. So unfortunately, we got worse pricing in the interest rates, and you guys have a great day. We'll see you guys tomorrow.